Welcome to the market updates. Okay, let's dive into this week's critical data. Because frankly, we're seeing some numbers that are just really hard to ignore, and they're all pointing to one massive question. Are we at a major turning point? Let's get right into it.
We're going to kick things off with a pretty bold claim that's been floating around a lot lately. The idea that the U.S. stock market is in the largest bubble in history. Whoa, that's a huge statement, right? So let's not just take anyone's word for it. Let's dig into the data and see if it actually holds any water.
So where's the proof for a claim that dramatic? Well, a really good place to start is with a classic metric, the S&P 500's price-to-book value. In simple terms, this just compares a company's stock price to its actual net worth. And right now, that average ratio is a staggering 5.3.
Now, to really wrap your head around just how high that is, we need some historical context. Let's go back to the absolute peak of the infamous dot-com bubble in 2000. At that time, this exact same metric, it hit 5.1. The fact that we're actually higher today should tell you everything you need to know about how stretched valuations have become.
And you know what? It's not just one metric flashing red. If we look over at the tech-heavy Nasdaq, the picture gets even more wild. The total value of all the companies on the Nasdaq is now 145% of the entire U.S. money supply. Just think about that for a second. The valuation of just that one index is way bigger than all the physical cash, all the bank deposits, and all the money market funds in the country combined. We have never seen a level like this before.
So with that pretty intense backdrop, here's our game plan. We're going to break down the key levels for U.S. equities. Then we'll take a deep dive into gold and silver. We'll check in on what's happening in the crypto market. And then we'll wrap it all up with a simple weekly watch list for you.
First up, U.S. equities. Let's see how this whole potential bubble scenario is actually playing out on the charts for the major indices.
Okay, so the S&P 500, it actually hit a brand new high last week. But look what happened right after. It completely reversed course, creating this pattern that traders call a bearish engulfing candle. Now, what does that mean? It basically means the sellers just jumped in and totally overwhelmed the buyers, right at the very top. It's a classic warning sign. So the number you've got to watch now is 6,323. If we break below that level, that could be the signal that a much deeper correction is getting started.
Over on the Nasdaq, we're seeing a pretty similar sign of exhaustion after that huge run-up. Now, there's some minor support at 23,312, but the real line in the sand, the one that really matters, is the weekly support down at 23,016. If we get a weekly close below that level, that would be a major red flag, telling us that the longer-term trend might actually be turning over.
And yep, the Dow Jones is telling a similar story too. It's really struggling to push past its all-time high of 45,073, and honestly, it just seems to be running out of steam. So keep a close eye on support at 43,950. If that breaks, it would show the bears are really starting to take control. So if stocks are looking tired and, well, kind of overvalued, it really begs the question, where else is money gonna go? And that brings us straight to precious metals.
Gold is caught in a classic tug-of-war right now, just chopping sideways. The battle lines are super clear. The sellers are holding strong at 33.75. That's a level that has just repeatedly stopped the price in its tracks. At the same time, the buyers are defending that major weekly support down at 3,300. A decisive breakout of this range is probably going to set the tone for the next few months.
Okay, so while gold is stuck in that range, the underlying story for its little brother, silver, is becoming, well, it's almost impossible to ignore. So what exactly makes the fundamental case for silver so compelling right now?
Just look at this chart. For the fifth year in a row, and that includes the projection for 2025, the world is using way more silver than it's actually mining. This isn't just a one-off thing. It's what we call a structural supply deficit. It means demand has consistently outrun new supply, and that trend, it's only speeding up.
And here is the key driver behind that deficit. Next year, industrial demand by itself is projected to gobble up 81% of all silver produced. And that's before a single person buys a coin or a bar for an investment. I mean, the world's transition to green energy and all this new tech, it literally runs on silver.
So, with such a powerful supply and demand story, what does that mean for the price? Well, technically, the bull case stays strong as long as silver stays above that key trend support at $37.44. If it holds that line, analysts are seeing potential for some serious upside, with targets at $57, $84, and even as high as $95 based on historical price action.
All right, let's shift gears now, from the world of ancient metals to the super fast-paced, highly volatile world of digital assets.
So Bitcoin popped to a new high last week, which on the surface sounds like great news. But there's a catch. While the price made a higher high, the momentum indicators behind the scenes actually made a lower high. Traders call this a divergent top. The easiest way to think about it is like a car's engine screaming louder, but the wheels are spinning slower. It's a classic warning sign that this rally might be running out of gas.
So with that potential weakness in mind, here are the lines in the sand for the crypto majors this week. For Bitcoin, the bulls absolutely need to defend $11,890. For Ethereum, which has honestly been a bit stronger, the key pivot point is $4,480, and for Ripple, it is all about holding $3.20. You're going to want to watch these levels very, very closely. Okay, we have covered a whole lot of ground. So let's boil it all down to the single most important number to watch for each asset this week.
Here it is. This is your cheat sheet for the week ahead. And you know, each of these levels, it tells a piece of the same story. A break in the S&P and Nasdaq supports could signal the start of a real stock correction. A break of gold's resistance or silver support could signal a major new move in metals. And for Bitcoin, that weekly support is really the last line of defense against a deeper pullback. When you put them all together, they paint a picture of a market that is truly on a knife's edge.
And that really brings us to the final question for the week. We've got historically expensive stocks, a massive supply crunch brewing in silver, and some serious exhaustion signals popping up in crypto. With all these different assets at such a clear crossroads, the question you should be asking yourself is this: are these key levels going to hold, or are we watching the very beginning of a major market shift?
Thanks so much for joining our channel. Your subscriptions and likes are always appreciated.